Hello everyone, welcome to Global Investment Journal again, our English series here at Audible Asset Management YouTube channel. My name is Bonnie. Today we will be introducing our analysis on a company we've mentioned in our Chinese video since last year, and it's rather traditional compared to what we normally talk about, it's Daimler. Before we start, please don't forget to like and subscribe our video and YouTube channel for more content. We share our insights on global multi-asset management through our English videos. In this video, we will basically talk about why we like Daimler and why we think it's an attractive stock. The Daimler Group is the parent company of lots of car brands, and the product mix is separated into two main branches, Mercedes-Benz Cars and Vans and Daimler Trucks and Buses. If you live in North America, you should be more familiar with their truck brands such as Fuso and Freightliner. Within their Mercedes Cars and Vans business model, we can see that they are trying to focus on developing their SUVs and vans. The main purpose of these models will most likely be family cars. On the left side of the slideshow, we can see that the sales and revenue of the SUVs and vans are increasing, even at a higher rate than the revenue of the passenger cars in general. We are keeping an eye on the growth of this product. In terms of passenger cars, the most popular product is SUV, which explains why they are developing this section. Geographically, China is the largest market right now with a 57.6% growth year-on-year. However, we must mention the competition between petrol cars and EVs when it comes to analyzing stock around the theme of vehicles, and that Mercedes had a lot of that as a company. I think Mercedes needs to gain investor trust again, and to do that, they say they will reform their internal operation and release 10 EV cars by 2022. Honestly, this plan is ahead of other major vehicle producers in Europe. We love that Mercedes-Benz acknowledge their own issues and is not afraid to publicly adjust on their change. They have highlighted 6 aspects of their strategy to improve. For example, they will maintain as a luxury brand, which is very important considering that they want to penetrate the EV market without the foundation of loyal EV fans. Their strategy also focuses on improving the synergy effects between customer and other business, which is something we love to see. But there is one thing we are quite wary of, is how they would lead in hardware and software for EVs. In July last year, we have shared our thoughts on Hong Kong first batch of EVs, EQC, on our Chinese series. There are more passenger cars that vary in size released right now, such as EQA, EQB, and EQS. As Mercedes is known for their luxury brand, a lot of fans and investors are more excited about the S-Class model. More importantly, we are anticipating the spin-off of Daimler Truck and Mercedes-Benz. In the interest of current Daimler shareholders, they haven't announced the full update of the spin-off, but we currently guess that your share will hold a majority of Mercedes-Benz and a small percentage of it will Daimler Truck. They have been working on the spin-off for a while, as you can see on the timeline, and they are expecting to list Daimler Truck at the end of this year. This might have an effect on the current stock price on Daimler. Looking forward, we are confident in Daimler's development of trucks. As we always mention in our other videos and guesting on other shows, we believe that the EV trucks market is a key blue ocean strategy for vehicle companies. There are no current dominant brand for EV trucks, not even Tesla, because there are too many issues to deal with it when it comes to expanding in the market. For example, whether to design the truck as a purely EV or with hydrogen fuel cell need to be carefully considered. On the upside, the competition is not as high as EV passenger cars definitely, and there are slices of the truck market to share with other vehicle companies. In this picture, we can see that there are a lot of variation to Daimler Truck product, even school buses and electric public transport for Europe. The more product it produces, the more market they could potentially penetrate. They acknowledge that within their blue ocean strategy, EV infrastructure will be a huge and essential foundation. That's why in US and Europe, they have already partnered with large charging companies. We think that this tactic is mainly to solidify the whole EV truck ecosystem. One more important note, Daimler has also signed a contract with contemporary Emperor's technology. Big fans of the EV industry will know that the competition and collaboration for EV batteries are very intense, and you may have heard of news about battery companies shifting between vehicle producers. Under this fierce environment, signed a contract with CATL until 2030 to ensure supply for EV batteries. We solve one of the key challenges for Daimler and strengthen their production chain. We also think that through the collaboration, functions such as fast charging will be improved quicker. Overall, Daimler has outperformed the German market in the first half of the year. The PE ratio is not particularly high. The dividends are decent. Looking at the graph on the bottom, it seems that the gross profit and shareholder return has recovered from the worst quarters during COVID. And not only that, it has improved compared to pre-pandemic. In terms of technical analysis, this is the monthly chart of Daimler dating from when they listed in 1998. We can see that it's now reaching toward to peak area, but there's still a bit of room between historical record high. Therefore, we think it is time for a consolidation. Since we have invested in this stock previously, we think it's not the best time to invest right now. We will wait for Daimler Truck spin-off and consider our next move when that happens. Looking at our FATA model, Daimler ranks high in terms of yield, momentum, and quality. However, the valuation is not really attractive currently. We have received questions from our viewers on the FATA model. Thank you so much for your comments. And we would like to clarify that this FATA model is a simplification of our methodology in choosing investment. We have a more complex points model and score, but this hexagon could be a valuable resource for your reference. Under different market conditions, we'll look for a different shape for the FATA. Obviously, a wider FATA model means that the stock ranks higher in all aspects, but sometimes we may look for stock with better yield and sometimes with better momentum. Again, depending on your strategy, we happily welcome viewers to join our membership for free by scanning the QR code on the right. Within there will be more FATA analysis available so you could utilize the score to strategize in your portfolio. Thank you so much for watching. Feel free to comment down below your questions, how you feel about Daimler, or any thoughts about the EV industry in Europe. We hope to see you again our next sharing.